Hi, I'm Sonia Luna, CEO of Aviva Spectrum. My guest today, which I'm super excited, is Darren Marble. Welcome, Darren.
Thanks for having me, Sonia. It's a real pleasure to be on your show.
Great. I've been really looking forward to this interview so we can offer our audience something very new, fresh, relevant about the best practices in crowdfunding and, more importantly, the key mistakes that they absolutely need to avoid. So, Darren, let's get into it. What are the biggest mistakes issuers are making when they're pursuing equity crowdfunding campaigns?
Well, it's a great question, Sonia. And in the context of Regulation A+, which allows private companies to raise up to $50 million annually and gives them the ability to generally solicit, the biggest mistake we've seen made so far is that too many young companies, premature companies, are opting for this type of fundraising, and they're not prepared for it, and they're really setting themselves up to fail. And so that's part of what, our goal at CrowdfundX has been, not only with our clients, but at the industry at large where we often speak, is to really educate issuers that Regulation A+, while it sounds attractive, and the idea that you can raise up to $50 million is very compelling for any company that wants to raise capital, the truth is that most companies are actually not going to be a good fit for Reg A+. And what we've seen in the last 18 months since this type of capital raising has become legal in the United States is that the types of companies that are destined to succeed or at least have a better shot at success are consumer products companies that have paying customers, that have passionate fans, reservation holders, social media followers. Those are businesses that tend to have products that may be inherently easy for the average American to understand. And of course, the most likely investor in your company is always going to be your customer. And certainly when you have paying customers, those are people who are obviously getting value, hopefully, from your product and know your brand. And so it's intuitive that those companies have been most successful. And yet we've seen, Sonia, a lot of pre-revenue, pre-product startups find attorneys that will take a fee to file a Form 1A with the SEC, and then they're kind of scratching their heads when they fail or struggle to raise, even tens of thousands of dollars, because they were really never a good fit to begin with.
So some of the common lessons here is don't go too early. In other words, make sure there's enough maturity, seasoning, if you will, but more importantly, it's that following, it's that compelling argument that you have enough people, some pairs of eyes that are watching what this, the company is doing, and more importantly, if you have paying customers, you have a better story to tell the market why you need to raise even more money because, look, not only do you have existing customers, but look how much growth you can with future customers or a future, let's say, fan base. That's very interesting because, not all IPOs are successful either, but by the time they get to a traditional IPO, they are definitely, on average, in terms of number of years been in business, at least 5 to 7 years within that range of in business. So it's not a business plan. It's like they've actually been there, done that. And I wanted to switch gears a little bit about strategies. Okay, what are the key strategies that you have seen that are successfully funding Reg A+ campaigns?
So another great question. I mean, look, by definition, equity crowdfunding is the online method of capital raising. So if we start with online, I think the two key strategies that are really critical for success in this space are storytelling and digital marketing. And both of these are easier said than done. Storytelling is absolutely critical to the success of any marketing campaign, yet ironically, it's also one of the most overlooked aspects of how issuers have attempted to run these campaigns. So what does that mean? When you're raising capital from the crowd, and the crowd could be your customers, fans, new constituents, you have to tell a story that is authentic, and you have to tell a story that emotionally inspires people. And Sonia, what we've learned, and this is really interesting, and a lot of the capital markets folks don't totally get this, is that the average American, believe it or not, may be more interested in investing in a company whose vision, mission, and values align with their own than being motivated by actually generating a financial return or making money. And so this is a new concept for a lot of people on the East Coast, investment banks, broker dealers. Typically when you invest, your goal is to generate a return. But in this case, we're seeing a lot of what's called passion investing. And these are people who want to invest in a company they believe in. They want to put their money behind a CEO who they believe in. And so therefore, the story needs to be an authentic, emotional story that sells the issuer's vision, mission, and values. So if they're able to identify that emotional hook and produce that story at a high production value, they then need to identify the likely investors in the deal and figure out how to most effectively and cost effectively reach that audience. And so we've seen in the past 18 months, certain digital marketing strategies have really been more effective than others. Email marketing has been very effective when done right. Paid media has been exceptionally effective when done right. And a quick example of what kind of paid media works. So, we as a financial marketing firm, we're big fans of Facebook. We think it's an incredibly powerful advertising platform. And it gives us the ability to target likely investors in a deal. And the way we do that is once we have maybe 500 investors in an offer that have actually subscribed, we can take the emails of those investors, Sonia, load them into Facebook, and then Facebook will match those emails up against the people who actually own the account and run an algorithm that assesses the demographics and taste profiles of that base of 500 people, and then creates what's called a lookalike audience. And this is where the power of Facebook comes into play. Facebook creates a lookalike audience of 1 million people, for instance, that have a similar look and feel to that initial base of 500, and from there we can run a very targeted ad buy campaign against that lookalike audience. So the theory is that once we have a little bit of data, maybe 500, 750 investors, we can then target people that have the same characteristics as that initial base. That's been one of the most effective strategies we've seen to date to help issuers identify likely investors in their deal.
Well, Darren, we are wrapping up this interview, and I'm confident our listeners gained just a ton of information on Reg A Plus for sure, and more importantly, the key success factors in running, funding, and expanding their business using Reg A Plus filings. So thank you, Darren, again for coming on our radio show.
It was such a pleasure, Sonia. Thank you for having me.
This is Sonia Luna, CEO and founder of Aviva Spectrum, signing off.